Have you ever walked into a bank, deposited some money, withdrew cash, or transferred funds without giving it a second thought? Most Americans do it every day. But what if I told you that some common banking habits can create problems you never saw coming? Now, this doesn't mean you've done anything wrong, and it definitely doesn't mean the IRS is watching every move you make. But it does mean there are certain banking mistakes that can raise questions, create unnecessary paperwork, or even attract attention you would rather avoid. The truth is that many people accidentally make these mistakes because nobody ever explained how the system works. And unfortunately, retirees are often among the people most affected. After decades of working hard and saving money, the last thing anyone wants is unexpected financial stress. That's why today's video is important. We're going to discuss 5 banking mistakes that financial professionals often warn people about, and why understanding them can help protect your finances and give you greater peace of mind. Before we get started, make sure to like this video, subscribe to the channel, and turn on notifications for more retirement, banking, and financial awareness content. And here's today's question. Have you ever had a bank transaction delayed, questioned, or flagged unexpectedly? Let us know in the comments below. Your experience may help other viewers learn something valuable. Mistake number 1, ignoring financial records. One of the most common mistakes people make is failing to keep organized records. Many Americans assume their bank will always have everything they need. While banks do maintain records, relying entirely on someone else to keep track of your financial history isn't always a good idea. Imagine trying to explain a large deposit from several years ago. Maybe it came from selling a vehicle. Maybe it was money from an inheritance. Maybe it was a transfer between accounts. Without proper documentation, proving where money came from can become much more difficult. Good record keeping isn't about expecting problems. It's about being prepared if questions ever arise. A simple folder containing important financial documents can save enormous amounts of time and stress later. Why small banking habits matter. Many people think financial problems happen because of huge mistakes, but that's not always true. In reality, small habits often create the biggest long-term consequences. Ignoring statements, forgetting paperwork, failing to review transactions, missing important notices. Each individual mistake may seem minor, but over time they can create confusion that's completely avoidable. That's why financial awareness is one of the most important skills retirees can develop. The more informed you are, the better protected your finances become. Mistake number 2, not understanding large transactions. Large deposits and withdrawals are completely normal for many Americans. People sell homes. They receive inheritances. They move retirement funds. They transfer money between accounts. None of these activities automatically mean something is wrong. However, problems can arise when people don't understand how these transactions are documented. Many retirees are surprised to learn that banks maintain records of significant financial activity as part of normal banking procedures. That's not because you've done anything wrong. It's simply part of how the financial system operates. The key lesson here is awareness. Whenever you're making a significant financial transaction, understand where the money is coming from, where it's going, and keep appropriate records. Doing so can eliminate confusion later. Quick reminder, if you're finding this information useful, take a moment to hit the like button and subscribe. These simple actions help the channel continue creating content. Mistake number 3, ignoring bank notices. Let's be honest, most people don't enjoy reading bank letters. Many notices get tossed aside without a second glance. Unfortunately, that's a mistake. Banks often send important information regarding account changes, policy updates, security alerts, and transaction reviews. Sometimes the notice looks boring. Sometimes it seems unimportant. But occasionally it contains information that requires action. Ignoring those communications can lead to unnecessary headaches. Sometimes the notice looks boring. Sometimes it seems unimportant. But occasionally it contains information that requires action. Ignoring those communications can lead to unnecessary headaches. The cost of assumptions. One of the biggest financial mistakes people make is assuming everything is fine simply because nothing appears wrong. Unfortunately, financial issues don't always announce themselves immediately. Sometimes mistakes go unnoticed for months, sometimes even longer. By the time they're discovered, fixing them becomes far more complicated. Successful retirees often share one habit. They review their finances regularly, not because they're worried, but because they understand the value of staying informed. Mistake number 4, sharing sensitive banking information. Scams targeting seniors continue to increase every year. Criminals have become incredibly sophisticated. Many scams now look completely legitimate. Emails, phone calls, text messages, even fake banking websites. That's why protecting personal banking information has never been more important. A legitimate bank will never want customers casually sharing passwords, account access codes, or sensitive security information. Being cautious isn't paranoia, it's smart financial behavior. And in today's world, it may be one of the most valuable habits you can develop. Looking ahead. So far, we've covered several banking habits that can create unnecessary problems. The good news? Every one of them is preventable. Simple awareness can make a tremendous difference. And there's still one more banking mistake we haven't discussed yet. In many cases, it turns out to be the most expensive mistake of all. We'll cover that next. Stay tuned for part 2. One of the most expensive mistakes people make is assuming the bank will automatically catch every issue before it affects them. Unfortunately, that's not always how things work. Banks process millions of transactions every day. While banks have systems designed to detect unusual activity, customers still play an important role in monitoring their own accounts. That's why regularly reviewing account activity is so important. Many people don't discover unauthorized charges, unexpected fees, or account errors until weeks or even months later. The earlier a problem is found, the easier it usually is to resolve. That's why financial experts often recommend checking account activity regularly instead of waiting for monthly statements. A few minutes of attention can save a great deal of stress later. Why retirees need to be extra careful? Retirees often face unique financial challenges. Many are living on fixed incomes. Many are managing retirement accounts. Many are receiving Social Security benefits or pension payments. And unfortunately, seniors are frequently targeted by scammers and fraudsters. That's why staying informed has become more important than ever. Financial awareness isn't about living in fear. It's about making confident decisions and protecting what you've worked so hard to build. After decades of saving, planning, and working, your retirement deserves protection. The good news is that most banking mistakes can be avoided with a little knowledge and attention. A simple habit that can protect your finances. If there's one habit that can help prevent many financial problems, it's this: pay attention to your money. That sounds simple, but many people become busy and stop reviewing their accounts regularly. A quick review every week can help identify unusual transactions, unexpected charges, or account changes. Small problems are usually easier to solve than large ones, and catching something early can make a huge difference. Think of it as a financial health checkup. Just as regular medical checkups help protect your health, regular account reviews help protect your finances. If you're getting value from this video so far, don't forget to hit the like button and subscribe to the channel. We create content specifically designed to help retirees stay informed, protect their savings, and make smarter financial decisions. What most people never ask. One interesting thing financial professionals often notice is that many people never ask questions. They receive a fee, they pay it, they receive a notice, they ignore it. They see a charge, they assume it's correct. But asking questions can be one of the most powerful financial tools available. Sometimes a simple phone call can clear up confusion. Sometimes it can identify an error. Sometimes it can reveal options you didn't know existed. The people who stay curious often make better financial decisions than those who simply assume everything is correct. The real goal isn't avoiding the IRS. When people hear IRS, they often become nervous. But the goal isn't to fear the IRS. The goal is to understand how financial systems work. Most financial problems happen because people misunderstand rules, overlook paperwork, or fail to keep proper records. Education is one of the best ways to avoid those mistakes. The more you understand about banking and finances, the more confident you become. And confidence leads to better decisions. Better decisions lead to stronger financial security. Why financial awareness matters more than ever. Today's financial world is very different from what it was 20 or 30 years ago. Online banking, mobile payments, digital transfers, electronic records. Technology has made banking easier in many ways, but it has also created new risks and new responsibilities. That's why learning about financial safety isn't optional anymore, it's essential, especially for retirees who want to protect their savings and enjoy greater peace of mind. knowledge remains one of the most valuable financial assets anyone can have. The bottom line, let's quickly review the 5 banking mistakes we discussed today. Failing to keep organized financial records, not understanding large transactions, ignoring important bank notices, sharing sensitive banking information, and assuming the bank will always catch problems before you do. None of these mistakes automatically create serious trouble, but together, they can increase risk and create unnecessary stress. Fortunately, every one of them can be avoided, and that's good news for anyone who wants to protect their finances. Before we finish, I have a question for you. What's the best financial advice you've ever received about banking, saving money, or protecting your retirement? Share your answer in the comments below. Your experience might help someone else avoid a costly mistake. And if this video helped you today, please take a moment to like the video, subscribe to the channel, and turn on the notification bell. New retirement, banking, and financial awareness videos are posted regularly. Final thoughts: financial security isn't built through one giant decision. It's built through hundreds of small decisions made consistently over time. Paying attention to your accounts, keeping good records, reviewing important notices, protecting personal information, and staying informed. These simple habits can help reduce stress, improve confidence, and protect the money you've worked your entire life to earn. Remember, the smartest financial decisions are often the simplest ones. Stay informed, stay careful, protect your future, and we'll see you in the next video.